Thanks for being with us live on Bloomberg TV and radio. I'm Joe Mathieu in Washington. This is the Tuesday edition of Balance of Power as we make way for important testimony here in Washington. We're also, of course, covering the markets, the impact that the Fed chair had following the CPI data this morning. And we've got our eyes on the White House as well. The president was holding forth with the prime minister of Iraq during that testimony. And we're going to touch all of these bases coming up here as we heard from the Fed chair that there is no mission accomplished sign to hang on the ship right now when it comes to inflation, noting the CPI drop this morning. He was asked about this by lawmakers, promising Congress that the Fed will deliver price stability in repeated exchanges with lawmakers, also committed to independence from the White House, something that came up repeatedly with Democrats on the panel, as you would expect. The Fed chair, as I mentioned, in the first of 2 days of congressional testimony, he'll be back on the Senate side tomorrow, what we used to call Humphrey Hawkins, twice a year. And it looks like this Fed chair will continue that tradition. Before we move on to politics, we want to check on Wall Street now. Of course, we've been eyeing trading all day following major bank earnings before the bell and the CPI data. And we're mixed up right now, but the broad market is pushing higher. And Charlie Pellet joins us with more on the markets from World Headquarters in New York. Charlie, take it away.
I thank you very much. Nice setup, Joe Mathieu. Happy Tuesday. Indeed, a Fed Tuesday. We have got the S&P pushing higher now by 30 points, 75.45, up by about 0.4%. Interesting, though, the divergence with the Dow Jones Industrial Average. Right now, we're looking at a Dow that is down by 66 points. That's a drop of 0.1%. IBM certainly weighing on the Dow. We've got IBM right now plunging by 24%. The NASDAQ Composite Index up by 1%. The NASDAQ 100 Index up 1.2%. All of this with the SOX surging 3% today. The VIX just above 16 and the 10-year at 4.57%. The 2-year 4.20%. Spot gold up 1.5% now, 4,061 the ounce, while West Texas Intermediate crude up 1.4%, 79.20 for a barrel of WTI. Brent just below 85 right now, barrel of Brent crude up by 1.9%. Again, IBM shares, they are plunging by 25%. This after preliminary results that missed analyst expectations, also reigniting questions over the sector's prospects among some of the other software names today. Microsoft down 0.9%, Oracle down 1.4%, and Salesforce down now by just about 0.1%. Bank earnings front and center today. Right now, we are looking at shares of major banks. Indeed, a mixed picture on some of the banks, but however, certainly a bellwether for the industry. J.P. Morgan Chase shares right now. J.P. Morgan Chase up $6.29 to $340.82 for JPM. That is a percentage gain right now of 1.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Mathieu is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Stunning move in IBM still at this hour. We'll keep track on all of these stocks that Charlie mentioned following the markets here throughout our political program on what is the Tuesday edition. Thanks for being with us. We're live in Washington, D.C. I'm Joe Mathieu. Kaylee Lyons is off this afternoon as we try to distill what we just heard from the Fed chair. Not a lot of surprises and no major news as he tried to make clear in his first of 2 days of testimony that there will be Fed independence from this White House and price stability. In many cases, he had trouble answering some questions about the changes to communication and the style in which this Fed will take its posture toward the public and toward Congress. Though, as he said clearly when asked, we have no intention of trying to hide the ball. Here's the Fed chair from his opening remarks.
The task for this generation of policymakers and of individuals and households in the private sector is to ensure that the American economy excels far into the future. Now, at the Fed, our number one objective is getting monetary policy right. That's our clear and constant aim, the star we steer by. And if we get policy right, and I can assure you we will, the inflation surge of the last 5 years will be a thing of the past.
Now, when you look to 8:30 this morning and the CPI report showing prices declining in June for the first time in 6 years, there is some encouragement here in the markets. Of course, watching and listening along with us is Bloomberg's Michael McKee, and he's still live on Capitol Hill with us right now to try to distill what we just heard. Mike, it's great to see you. No mission accomplished was the message from this Fed chair. Is this consistent today with what we heard in his confirmation hearing?
It's pretty consistent. Basically, you know, Joe, here in Washington, we get sometimes hearings with heat and sometimes hearings with light. And today we kind of had neither one. It was a welcome to the Hill. We'll see you often over the next 4 years kind of meeting. Both parties were generally very polite to him. Nobody yelled at him. Nobody complained about his policies because, as he said over and over again, I've only been here for 7 weeks. And certainly the Fed's policy decision at the last meeting in June would have had no effect on CPI today. The one thing he did not answer that all of Wall Street wanted him to answer was not, are you going to target inflation and bring it down? He's already said that, and that's the Fed's job. But how are you going to do that? He dodged questions on whether they would raise interest rates, and he dodged questions about whether they would use the balance sheet. The closest he came at one point was saying that he didn't want to prejudge what his committee members would say when they discuss the extent and timing of any future moves. Now, you could read into extent and timing talking about perhaps a rate increase, but he wouldn't go so far as to say that's even on the table at this point. No forward guidance was his mantra, and no forward guidance is what we got.
Interesting. When we look at the headline index up 3.5% from a year earlier, Mike, there was some encouraging signs that gas prices, oil prices were coming down. Now that they're going back up with a resumption in the war with Iran, what could this look like a month from now?
Well, it could look like kind of the same thing in the sense, Joe, that we will see gasoline prices rise again and probably other goods prices rise again. The folks over at Gas Buddy were saying we'll see $4 gas as a nationwide average within the next week. But that doesn't change anything for the Fed from the picture it basically has right now, that inflation is still too high. Yes, it came down, but it's still running at a 3.5% rate annually, and that's way above the 2% target that Kevin Warsh today over and over again said they would get to. So it's going to maybe, the CPI today maybe takes it off the table for July 29th, but it's definitely going to be a factor going into the September and October meetings.
Interesting. You know, the president was asked about the CPI. He was talking at the same time in the Oval Office while Chair Warsh was testifying. Michael McKee, he said, the report just came out. We're doing a great job. Remember that for the midterms. Prices are coming way down. We're going to bring them much lower yet. How will he do that considering the state of politics in the Middle East? Well, the thing that presidents don't tell you is they really can't affect the economy in a short-run kind of fashion. No president can. They get the blame because they're in office. They get the credit if things go well. But there isn't much the administration can do at this point except get out of the war and bring oil prices down. But other sticky prices, which Kevin Warsh acknowledged today he wants to target, are going to be there for a while because companies are still trying to make up their costs. Also, don't forget, we haven't talked about the new tariffs that are coming in a while, and those are going to have an effect as well. Maybe certainly not as much of an impact as the first round of tariffs because they were so broad, but that'll raise prices on some goods too. And so all that has to work its way through the system. Mike, thank you so much. Bloomberg's Michael McKee with us live from Capitol Hill with testimony today. Day one for Chair Warsh. She's, as we mentioned, in the upper chamber tomorrow on the other side of the rotunda for Senate testimony, which we'll be talking more about at this time tomorrow. We have to bring you up to date on what is happening in Iran. President Trump making quite a bit of news today, taking to Truth Social to announce his plans to back away from the 20% charge, fee, or toll, whatever you wanted to call it. He calls it a reimbursement on shipments through the Strait of Hormuz that he floated yesterday, widely panned as impractical. He was asked about this, as a matter of fact, in the Oval Office a short time ago, and apparently the phone was ringing. He said that he heard from a number of countries in the region, Gulf Arab leaders, calling him to offer instead investments into the United States. And he has chosen to pivot on this. Here's the president from a short time ago in the Oval Office.
I gave them a chance I wanted to give them a chance at making a deal. You know, we had a deal 2 days ago. It was done. And then all of a sudden, they couldn't do it. They didn't like something about the deal. They couldn't do it. And they shot first, and that was a big mistake that they shot first, because we have been knocking the hell out of them.
And says that we will continue to do so. Adding on Truth Social, quote, I have decided to replace the 20% United States reimbursement fee with trade and investment deals that the various Gulf states will be making into the United States. He says these investments will be massive, but at the same time extraordinarily good for them and their future. He did, in fact, qualify this more specifically when asked in the Oval Office. He said you have Saudi Arabia, UAE, Qatar, Bahrain, and Kuwait primarily, and then others. Jenny Welch joins us now, geoeconomics analyst at Bloomberg Economics, covering all of this here from Washington. Jenny, it's great to see you. How is this going to work now? And it does remind us of a time when Mexico is going to pay for the border wall, and he says they did through trade deals. Is this a similar approach?
I think we're taking this with a pretty big grain of salt, especially considering the U.S. already has trade and investment deals inked with these countries, many of them last year during Trump's trip to the region. I think this is a little bit of an out, a way of pivoting. And at the end of the day, the main group that's going to be paying for this is going to be the U.S. taxpayer.
Okay, so it's back to inflation, where we started our conversation this hour with Chair Warsh. Give us your broad view on what's happening in the Strait right now. The president saying in that same post that we have a blockade back in effect, but it's for Iran only. Can we use a scalpel to that extent in the Strait of Hormuz?
Yeah, I think this is largely returning to the operations that existed before the MOU was signed just a few weeks ago. And the U.S. has maintained forces in the region, should be able to snap those back in place relatively quickly. Blockades starting again later today. I think one of the questions we're looking to see, though, is beyond the blockade, is there going to be more escorting of vessels through the Strait to kind of guarantee that safe passage? Those operations are very expensive. They're very risky. The U.S. only engaged in true naval escorts under Project Freedom for about a day or so before pulling that operation down. So if the president is really keen on fully reopening the Strait, it would probably require those more intensive operations. But again, huge risk, huge cost.
So when we hear about the U.S. Escorting 6 vessels through the Strait overnight, transponders off, what kind of military presence are we talking about here? This is fighter jets, helicopters, air cover of any, are we actually sailing through the Strait alongside them?
I think that's where there's a spectrum of options. It can be everything from providing ships a sense of here are the routes to take to we will actually provide you some surveillance and eye in the sky capabilities to give you a heads up on whether threats are coming your way, to overhead actual security coverage, to, yes, the physical escort by naval vessels. That last step is, you know, really brings you to a much larger but much more expensive package and a very risky one, because if you're going to put ships in the Strait, you're going to need to provide them additional protection on top of that, which is, again, why that Project Freedom operation ended up being relatively short-lived.
Yeah, not even a day, as we recall. So we're back at war. The president's notified Congress. So it's not only back before the MOU, it's back to the first couple of weeks of kinetic action here. Another day of trading strikes. Do you expect this will continue until further notice? And where are we coming up with all of these targets now that we've in many cases already hit?
Yes, I think we're returning to a lot of tactics that have already been tried in earlier phases of this conflict. And I think our view would be, in a sense, the war never really ended. There was a ceasefire, but there were still strikes through that ceasefire phase. The MOU itself was relatively shaky, and we saw skirmishing happen relatively soon after it was signed. This is just a continuation of that limbo. And what we would say is that we're likely to see a continuation of low intensity, protracted fighting for the foreseeable future. Neither side wants to back down. Neither side wants to yield. And neither side is really even speaking the same language when it comes to negotiations.
So we're going to start this 60-day countdown, not for a ceasefire, but for war powers? Or is the White House out of the business of keeping that clock?
I think the White House is out of that business. I'm not sure they were ever in that business. And they don't want to give Congress the vote on it. I think the other thing is, yes, we are continuing this conflict, but that doesn't necessarily mean we're going to return to the early days of the war, that high intensity of strikes and fighting. I think both sides want to avoid that.
Interesting. He had an interview yesterday. It was on the Hugh Hewitt show, the president, that is. Said the U.S. will hit Iran very hard in the coming days, calling the Pickaxe Mountain nuclear site a possible target, he said, quote, for a nice big fat shot, unquote. Was that part of the strikes that we did against the nuclear infrastructure last summer?
We've heard him repeatedly reference this idea of like a job. To a certain extent, he says unfinished, that we want to go back and restrike those facilities, but then at the same time, the material is buried and they can't access it, so we don't need to worry about it. We'll just monitor it. He's kind of flip-flopped on this point, but he has referenced the idea of going back and striking those sites, in addition to threats against, more critical energy infrastructure and bridges and that sort of thing. So I think that those are some of the things that they are toying with in terms of escalation possibilities, but those come with extremely high risks of bringing the conflict to a point where you have a true breakdown in negotiations and talks. He's been saying talks could continue, they could restart even though the MOU is dead. If the U.S. were to engage in those kinds of strikes, I think we would see more of a reset back to where we were earlier in the war.
Just quickly before you leave us, what's the biggest threat right now in the Strait? Missiles, drones, both?
All of the above, plus fast attack craft.
Wow, amazing. Jenny, thank you so much. So little has changed. Thank you for being with us here. Now that we're out of Warsh testimony, we're full speed ahead on the Tuesday edition of Balance of Power, and we'll assemble our political panel next. Congressman Troy Downing will be in later this hour, only here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Oil higher. Kevin Warsh goes to Capitol Hill. IBM gets crushed. CPI comes in cooler than estimated. All of this as investors digest bank earnings. Right now, the S&P 500 index holding on to a gain of 33 points, up by 0.4%, rebounding from yesterday's decline. The Dow, however, in the red, down 54, drop there of 0.1%. IBM weighing on the Dow right now. IBM shares are plunging 24.5%. NASDAQ up 1%. NASDAQ 100 index doing a little bit better, up by 1.3%. All of this with the SOX rallying 3.2% and the VIX just above 16. The 10-year 4.58%. The 2-year 4.21%. Gold is up $56 the ounce, up by 1.4%. $4,058 on the precious metal. West Texas Intermediate crude rallying as investors digest what's happening in the Middle East. WTI right now up by about 1.2%. Brent at $84.56. Barrel of Brent up by 1.5%. Bank earnings front and center this morning. JP Morgan Chase did report its highest quarterly profit ever as stock traders blew past analyst estimates. JP Morgan Chase up now by 1.8% among some of the other banks reporting this morning. Citigroup down 4.4%. Wells Fargo down 2.1%. Bank of America up 1.9%. Goldman Sachs after earnings surging now by 7.4%. Morgan Stanley, which reports tomorrow, up by 3.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. At Joe Mathieu is a Bloomberg Business Flash.
Okay, Charlie, we thank you so much. Charlie Pellet will be back in about 20 minutes' time with more on the markets today as we connect the dots between policy here in Washington. A lot of it to connect to the markets, whether it's the testimony from Fed Chair Warsh following the CPI report that came out this morning here in Washington, or the president's policies in the Middle East, making clear that the 20% reimbursement fee he called for yesterday in the Strait of Hormuz as part of a blockade against Iran, but no one else, will in fact be replaced by deal-making, by foreign direct investment in the U.S. from our partners who we would presumably be protecting and helping to escort through the Strait. We may learn more about this in the president's primetime address on Thursday evening. He announced this yesterday, 9 p.m. Eastern Time, and as you know, this is a rare venue for this president, a primetime address, recalling the old fireside chats, or even a president behind the resolute desk, which is something that this commander-in-chief has chosen not to do when he addresses the nation solo in prime time. It will be a potpourri when asked about the topic and why the president needs to speak to the nation on Thursday evening. Presidential advisor speaking with Axios, saying that he will likely speak about the war in Iran, but he may speak to a number of other issues, including the Save America Act, and, quote, may present his intelligence officials' findings about the 2020 election, unquote. Of course, the president has never admitted he lost that election and will presumably be coming up with some news on Thursday evening. This speech to the nation while rare for this president, may be followed by many more. Officials at the White House also telling Axios they want to get into a rhythm of doing this. A powerful tool, the primetime address. He wants to do more of them. The president speaking earlier today from the Oval Office as he spent time with the Prime Minister of Iraq, speaking to the situation in Iran and specifically the Strait of Hormuz and why he decided to change his tune on tolls, or as he puts it, reimbursement fees for the Strait. Here's the president. Listen.
You have Saudi Arabia, UAE, Qatar, Bahrain, and Kuwait, primarily, and then others. I spoke to all of them, and they would love to invest more money in the United States at record amounts, and that would be very acceptable. And this way, there's no fee.
No fee, as he says. We play it to our panel. Bloomberg Politics contributors Rick Davis and Jeanne Zaino are with us. Rick is our Republican strategist, partner at Stonecourt Capital, and Jeanne is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. What are we thinking about this, guys? It's been less than 24 hours, and the story has changed dramatically. Rick, does FDI replace the toll in the Strait, and how do we quantify that in the end?
Yeah, and I'm not even sure what we're trying to replace. The 20% tariff on, these ships would have raised an enormous amount of money, ostensibly to pay for operations in the Gulf to keep the Strait open. Foreign direct investment would offset that. How? And in these countries like UAE and Qatar and Saudi Arabia, they've already committed almost $4 trillion to investment in the United States from previous announced deals in this term of office by President Trump. So are they prepared to go for $5 trillion? It's just, is Bob Barker now, sort of channeling Donald Trump? How much can we get for this? So I don't know. It's kind of a specious argument. So much going on right now that it doesn't seem very consistent. We're sort of right back to where we started, deja vu all over again in the Persian Gulf. And I do fear that without a plan, we could be having the same conversation for months.
Well, it is interesting. Yes, it's back to the future in the Strait of Hormuz. Jeanne, the president, as you might remember, used to qualify Mexico paying for the border wall after saying that in the campaign, who's going to pay for it? The crowd would scream Mexico. And while Mexico did not write a check, he said it still was reimbursed to the United States through trade deals. Is that essentially what we're talking about here for the Strait of Hormuz?
The logic here just makes absolutely no sense. Are we to believe now that the president embarked on a war that is costing us lives and economy $1 billion a day, and what we're going to get out of it is a 20% levy that even his own Secretary of State said the other day is a violation of international law? And then once he puts that out as a trial balloon yesterday, and it comes back from senators like Roger Wicker and others, but most importantly, the market doesn't respond well, he says, oh, wait, forget that. Now we're going to go with foreign direct investment. Why were we going into Iran to begin with? We were supposed to go in, according to the president the other day, to deal with the problem of nuclear weapons and their nuclear program. That has not happened. And the president is in a quagmire of his own making. It's clear he has no way to get out of it. And so he is spinning as hard as he can. The American taxpayers are going to pay and have been paying for the price of this war, just as we paid for any wall built on the Mexican border. But more importantly, we have an economy that's struggling. And Joe, did I just hear you correctly? He is going to use a prime time address on Thursday to talk about the 2020 election with CPI numbers like this, with costs going up, with an active war. And he's going to talk about the 2020 election. I hope calmer heads prevail in the White House. That would be a disaster politically.
Well, let's talk about that, Rick. The president's got the time. We'll see how he decides to use it on Thursday evening. It is curious that you call for a primetime address without a very deliberate message to send. The White House in this reporting from Axios still seems to be crystallizing exactly what the message will be. But if it is, in fact, a potpourri that includes trying to blow holes in the 2020 election, what does that do for not the president as much as the Republican Party?
Well, I'd first say, Joe, that this is a president that makes massive geopolitical announcements sitting behind the Resolute desk during the day while meetings are going on. And
That's
so
true.
he doesn't really stick to the script of a traditional presidential address that we're used to. So, yeah, sure. Well, I'm not surprised he would want to spend more time at prime time talking to the American public and the rest of the world. It just seems to fit his MO. That being said, I do share Jeanne's concerns that going back and talking about the 2020 election, reporting on what your intelligence director has found on fraud related to it, something that no one else in his organization for almost 10 years have been able to uncover, is a little specious and would really distract the Republicans who are running for re-election this year from their really appointed mission, which is to talk about affordability, talk about cost of living. And he does all this right after he gets a decent CPI mark, which would be actually what you should be talking about to the American public, that we're sort of making a little bit of a crack, in inflation, which is their number one issue.
Yeah, it's a pretty great headline for him today. The first decline in CPI in a long time, Jeannie, and he says we're going to bring prices much lower yet. He was also asked about the sanctions bill that may carry the name of the late Senator Lindsey Graham, and I'd love to hear from both of you on this. He was asked if he will sign a Russia sanctions bill if it passes Congress, and it looks like it will. This had the votes a long time ago. He said Lindsey wanted it very badly, Jeannie. Now, not a yes or no. Lindsey wanted it very badly, and I think they're going to add Iran to it and Hezbollah too. Does that complicate things? If that is the case, would it still pass?
It may still pass. The way that Lindsey Graham and the way that the senator from Connecticut, Blumenthal, had constructed it, it was widely popular and would have passed. Now, if they go back and they try to reconfigure it, that can always create complications, particularly in a Senate with such a narrow Republican majority. But I think what we're hearing from the president is what we've heard repeatedly. The White House did not want to support this initially. They kept saying it would throw a monkey wrench into negotiations with Russia, which don't really seem to be ongoing. Now they sort of have been wavering, but the president has been noticeably non-committal. If he was really intent on this, when he went on Meet the Press on Sunday, just after Lindsey Graham passed, why wasn't this the first thing he talked about? Instead, he talked again about the Save America Act. And that tells you, I think, all you need to know about where the president's head is on this. As usual, his focus is on himself and what he deems to be most important, and that is not the sanctions bill. So I don't know that they're going to block it. I don't know that they're going to not push for it, but I don't think the president is going to spend much energy there. And if he was, why not talk about that on Thursday night in your primetime address?
Yeah, right.
Instead, he's going to talk about 2020 and election stealing and, of course, get right back to the Save America Voting Act.
Well, and I don't know. Look, that's what Axios is reporting here, whether we get to 2020 or not, Jeannie. You would think that this would be a major selling point. Rick, what do you think about this? Does this imply that the president doesn't want to have a piece of legislation that hits Vladimir Putin between the eyes? You add Iran, you add Hezbollah, spread it out a little bit?
Yeah, it may be just a reaction to Iran and Hezbollah in the current sort of sticky wicket that they're all involved in together. So I wouldn't read too much into it. I mean, I think that's a lesson we got to learn with this president. Don't overthink, because he's certainly not doing that. And yet there's a lot of support for this sanctions bill. I hope they pass it with Lindsey's name on it.
Appreciate the insights, as always, with our great panel. That's Rick Davis and Jeanne Zaino, of course, Bloomberg Politics contributors. We'll get into the markets next. Spend some time as well with Congressman Troy Downing, the Republican from Montana, is next on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, S&P, NASDAQ 100 index all advancing. A cooler than estimated inflation reading, spurring gains in both stocks and bonds, easing concern about imminent Federal Reserve interest rate hikes. Consumer prices dropped in June for the first time in 6 years. The Dow lower now by 64 points, down 0.1%. IBM certainly weighing on the Dow today. IBM now down by 24.5%. S&P up 32, up by about 0.4%. NASDAQ is higher by 1%. The NASDAQ 100 index up 1.3%. All of this with the stocks gaining 3.1%. That, of course, the Philadelphia Stock Exchange Semiconductor Index. The VIX, meanwhile, holding above 16, a 10-year at 4.58%, the 2-year 4.20%. Gold, 4,062. Yesterday dipping below 4K. Right now we've got spot gold up by 1.5%. West Texas Intermediate crude gaining as investors keep an eye on developments in the Strait of Hormuz. WTI 78.85 a barrel, up 0.9%. Brent 84.54 now, up 1.5%. Corporate news, Uber in advanced negotiations to buy German food delivery company Delivery Hero to better compete with rival DoorDash outside of the United States. Uber shares trading lower right now by 2.1%. Rival Lyft down 0.3%. Bank earnings front and center today among some of the banks reporting this morning. JP Morgan Chase up by 1.2%. Our Nora Melinda will have a whole lot more on the group coming up in just a moment. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe Mathieu, that is a Bloomberg Business Flash.
All right, Charlie, thank you, sir. The voice of Wall Street and the New York subway. We'll be back at the top of the hour, 2 p.m. Eastern, with more on the markets. That's when we kick off Bloomberg Business Week daily, right here on Bloomberg TV and radio and on YouTube. If you want to find us, search Bloomberg Business News Live. You can pause it, you can back it up. We'll save a seat for you in the studio, as always. And we'll bring you up to Capitol Hill in a moment to meet Congressman Downing, who's going to be joining us to talk about a range of issues today. We just want to go a bit deeper under the hood on these markets. As Charlie mentioned, Nora Melinda is watching these bank earnings, and they are rather impressive here as we officially kick off the earnings reporting season. We're talking about Goldman Sachs. This Dow Industrial Average would be way down with the losses in IBM that are being essentially offset by Goldman. A nice move. Goldman, JP Morgan pointing higher after a difficult start, and Morgan Stanley. Nora Melinda is live at World Headquarters in New York. Look at these headlines on the terminal. Nora, Goldman beats stock trading records with $7.42 billion boon. JP Morgan bags record profit, $6 billion stock trading haul. This is an unprecedented quarter for Wall Street.
Absolutely. Just a spectacular quarter as we're going through some of the metrics that we're getting out of these major banks. 5 of the 6 reporting today as we look at how the economy is doing right now and just how these banks have been reporting. So as you mentioned, we saw Goldman Sachs posting a record $7.4 billion, specifically in its stock trading unit. And when we think about revenue there, this, of course, marking the 3rd straight quarter that it has set an all-time record for any bank. And then JP Morgan, of course, reporting that $6 billion from their equities trading alone. Bank of America also setting a record. So we're just hearing record after record after record. But what the question is now is whether or not we're actually going to see this as a new normal or whether or not this is simply just an extraordinary quarter. And that's the question that investors are asking right now. But when you take a look at how equities are trading off of this news, you can, of course, see, I'm looking at the BKX, that is the KBW Bank Index, up by about 0.6%. But you are seeing a lot of these banks getting some love today.
Yeah, I know Jamie Dimon was a bit guarded, as he's been known to be on the JP Morgan call, suggesting this could continue. But at some point, you know, all good things do come to an end. And I'm wondering what you're watching in the next couple of days as earnings reporting season really gets moving here, Nora. That warning that we got, the pre-announcement, I should really call it, from IBM, spooked a lot of people today.
A lot of people spooked by the news that we got out of IBM, especially as we're thinking about the tech space more broadly. We saw that IBM did report some preliminary 2nd quarter sales that fell short of expectations. And so you're certainly seeing investors rattled on Wall Street. The CEO essentially saying that they weren't expecting customers to essentially shift their spending away from IBM's products and putting it into servers, storage, memory to hedge against some of those further price increases. And so we are really seeing this really pronounced as we look at the moves of IBM. But if you take a look on a larger scope, if you take a look under the hood for the S&P 500, we are still seeing tech as the best performing group. So you're still seeing a sense of bullishness as it relates to certain other names that are in the market.
Another divergence within tech. Nora, great to have you as always. Nora Melinda helping us find the truth from world headquarters in New York as we turn our attention back to geopolitics and our conversation with the Congressman, knowing that oil prices have pulled back a bit from their highs of the session. The president's different position on this idea of a 20% reimbursement fee for the Strait of Hormuz. He says instead we'll seek foreign direct investment from Middle Eastern allies. And oil prices have pulled back. They're still moving higher. Brent crude right now is up over 1.5% to almost $85 a barrel. WTI is up about a little more than 1% to $79 a barrel to the penny. Troy Downing, the Republican congressman from Montana, joins us now, of course, an Air Force veteran and someone who we've talked to quite a bit since the start of this war about the way forward here. He serves on House Financial Services as well. And it's good to have you back, Congressman, on Bloomberg TV and radio. The president has alerted Congress, has let you and your colleagues know that we're back to war with Iran. And I'm wondering, particularly as an Air Force veteran, what you think is the best course of action here, if we should continue to pursue talks or if it's back to all-out war.
Well, you know, we've seen this going on for 47 years. We're dealing with a country that doesn't negotiate in good faith. But I'm going to say that we need to stick with our original goals in this conflict. We need to make sure that we never ever see a nuclear capable Iran. And the second thing is we need to make sure that we see commerce, normal commerce, passing through the Strait of Hormuz without any, toll booths or toll gates or any kind of, interference there. And I think that what the president is doing right now, and, he's obviously renewed the blockade on Iranian ports there. And a lot of times the way you get, people to comply is through their pocketbook, and that's back onto that goal. But the other thing is that, if they're going to continue to not act in good faith, we need to do what we need to do to make sure that we never have this world, not just the United States and our allies, but this planet being subject to a nuclear Iran. I think it's important that we see this through.
I wonder your thoughts on the president's approach to what he referred to as a reimbursement fee yesterday. Some would call it a toll for the Strait. He says he heard from a lot of our allies in the region, Congressman, and they would prefer to invest in the United States, knowing that they have already invested hundreds of billions of dollars, trillions combined. How would this work exactly, and how would we quantify the investment to know that it was paying for the services that the president says will be providing?
Right. Well, first of all, I think that the president has pulled back on that, last I heard, on that direct reimbursement. And I think that that's correct. In terms of investment, I think that's something that we should always be encouraging. I think that's good for our country. I think that's a good direction to monitor that. It's like a lot of things, the words matter, and it really depends on how we put this whole deal together to make sure that we do have. And the operative word is investment. We have investment so that there's an expected return and there's benefit for us as well for everything that we're doing to make sure that a bad actor isn't completely going in contradiction to international maritime law and trying to shut off, international waterways where we've got, obviously, oil's the big topic, but we've got a lot of things passing through that strait that, the United States, our allies, and this, a lot of countries around the world depend on.
I mentioned you served in the Air Force, Congressman. You were in Afghanistan doing search and rescue operations. So your view is unique for many in Washington, D.C. And I'm wondering if you think the administration underestimated the ability of Iran to use asymmetric warfare to make this a lot more difficult than we had estimated.
Well, a lot of times when you go to war, you do the best you can to understand the enemy. And I believe that the president, I believe that Secretary Hegseth, Secretary Rubio, understand this adversary. And a big part of this that you kind of alluded to early on is whether we should be talking or doing. We've got 47 years of bad faith talking. Now we're doing, yes, you've got to be ready for what may or may not happen. And for a lot of folks, me included, it hasn't happened as quickly as we'd like it to be. But we still need to stick to our guns, in my opinion, and make sure that this job is done so that this country will no longer be a threat to, global civilization.
Yeah. We know your Financial Services Committee met with the chair earlier today. We carried that hearing in its entirety, Congressman. The first of 2 days for Chair Warsh. And of course, affordability is a massive issue here in Washington for anyone running for re-election for this administration. It's something that everyone has in common here. And that, of course, was the spirit of that conversation with the Fed chair. I bring it up because I want to ask you about this housing bill that just recently became law without the president's signature, something that we talked about quite a bit. You wrote a piece of that bill, the Whole Home Repairs Act of 2025, which awards HUD grants to homeowners of lesser means to make repairs to upgrade their homes. You heard what the president said, that this bill was a big yawn, but is this not a direct example of what might actually help people? When would they be able to make this an opportunity for themselves?
Yeah, well, first of all, I think sometimes, the president will say things that, that are not exactly. I think he said that in the moment, but I think that the president does see a lot of the good things that we have in this bill. And obviously the administration was part of some of this crafting of it. So one of the big issues, just to pull back a little bit, that I run into across my district is recruiting and retaining folks for rural hospitals and schools. One of the biggest issues we have is finding places for people to live. We just have a dearth of availability of affordable housing. And so any place that you do corrections in the whole strata from high end to entry level creates positive pressure and creating availability for somebody else up or down that strata. So what this bill does is there's some homes that have fallen into a state of disrepair where they don't qualify for a lot of HUD programs. So this helps that lower strata of this housing so that it can qualify for these programs so that we can get these repaired. It's not any new funding. This is just reallocated of some funds that were being underutilized. So there's no new money coming into this. Just want to make that clear. But what that does is you start to fix that. It creates opportunity for that level, and people move up and down the strata that actually help solve this problem, for everybody. And I think that this is a good, positive movement for a huge need in my district.
Yeah, absolutely. With regard to affordability and prices, we got the CPI today, of course, and the headline is a bell ringer. Consumer prices down in June for the first time in 6 years. That's something that you can crow about. The CPI down 0.4 from May, biggest decline in gasoline we've seen since 2022. The headline index, though, still shows very stubborn inflation, 3.5% from a year earlier. And the chair was very careful with his remarks about this, Congressman. Here's what he said.
It's one data point. The reason I created a task force on data is I don't want to overread or cherry pick data. There might be some that look at this morning's data and say, oh, mission accomplished, everything is swell. That is not my view.
I think most politicians have learned not to say mission accomplished pretty much any time, Congressman. I'm just wondering how you view this, and if you're worried that this resumption of kinetic activity in Iran, pushing oil prices today, is going to bring those gas prices back up.
Well, here's the thing, is we see in certain sectors of the economy, some things are particularly volatile just based on headlines. And I think we'll continue to see that, especially on the energy side, especially, prices at the pump. But, long term, I'm feeling pretty good about the direction we're going. No, we're not going to say mission accomplished. But, one of the things that I think about often in federal monetary policy is, we talk about the dual mandate of employment versus price stability. And I believe that what we're going to see from Warsh is really focusing on that price stability, which I think has the most meaningful long-term impacts. And I do believe we're going in the right direction, but I don't believe that we should be, singing praises on something that may be transitory in nature.
Well, I appreciate that answer. With that dual mandate in mind, do you think it's time to cut, or is it too early?
I think it might be a little too early right now, but I'm going to leave that to the folks in the Fed to make that decision. I think that that we have leadership there that is going to make the right decision to make sure we stabilize and don't just create this ringing effect of a pendulum, swinging drastically that is not in anybody's interest. So I'm feeling pretty good about where we're going to go with the Fed moving forward and really focusing on that price stability part.
He's a member of the House Financial Services Committee. Congressman, I'm glad you could join us. Troy Downing, Republican from Montana, we thank you for the insights as always. And we'll have a lot more on the late edition of Balance of Power. That starts at 5 p.m. Eastern Time. Between now and then, Bloomberg Business Week Daily. That's coming up next on Bloomberg TV and radio.